Tom Smith here from Trade Monster. Welcome. Thank you for joining us for another edition of our free educational webinars. Today we have our stalwart, Chuck Hughes. He's going to be joining us. Chuck's with us quite often, and he's done a lot of educational webinars, and he's been kind enough to allow us to post these up on our archive. I'll go ahead and I'll post up the archive area after the webinar, so if you'd like to review this, download it, play it back, contact Chuck's support team, them directly. Chuck's going to be putting up some slides for that, so if you can hold off on those kind of questions, we'll have that up near the end. For those of you that have to leave early, I'll have this archived tomorrow sometime, hopefully by the morning on www.mytrademonster.com, but I will have that posted later on in the webinar. Otherwise, why don't we go ahead and get this started. Chuck, are you with us?
Yes, can you hear me, Tom?
Yeah, I can hear you great, Chuck. Thanks a lot for joining us today, and I'm looking forward to the super portfolio presentation. So I'm going to go ahead and I'm going to hand the reins over to you, and then we can go ahead and get this started.
Okay, sounds good. Thanks for setting this up, Tom. We all appreciate it.
Oh, you're very welcome. Sending it over to you now, Chuck.
Okay. All right, here we go. Good afternoon, everybody. It's great to be here.
We can't see anything, buddy.
You can't see anything?
No. There we go. Now we got it.
Okay, thanks. You got it? All right. Good afternoon, everybody. It's great to be here in our continuing series of educational webinars. I want to thank Tom for taking the time to set these up. It's a great way for investors, traders to learn about different strategies that are working well in today's market. And I trade these strategies day in and day out, and I try to show, my real-time trades just so you can get a feel that, these strategies actually are working in real time. So I think this is a benefit for everybody that is trying to learn how to trade, and hopefully you can get some good ideas from these webinars each month. So today we wanted to talk about the super portfolio, and the super portfolio has been working well for many years. And what we try to do is we try to combine technical analysis with fundamental analysis to come up with the best stocks with the best profit potential. So today we're going to look at the super portfolio, and then we'll also look at the super option portfolio. And the super option portfolio buys call options on super portfolio stocks. And we have a technique that will help you with your option trading as far as selecting the strike price of the option. So we're going to talk about that today. And I also have some both super portfolio and super option portfolio trades that you can take tomorrow. I put together some price charts of stocks that look really good right now for either purchasing the stock or a call option. So I'm going to be presenting those today, and then at the end we'll have a question and answer session, and I'll be glad to answer any questions. So I just want to give you an idea how the super portfolio has been performing over the last 4 or 5 years. I've had total profits of over $3 million, and my brokerage account profit loss reports that I'm going to show you today show over $1.2 million profits in stocks and over $1.8 million profits in options. And most of the trades in these two portfolios are super portfolio stocks, and I have some ETF trades mixed in there, but the vast majority are super portfolio stocks. And just to break it down a little bit, the stocks had over $1.2 million in profits, average return of 36%. And the options had over $1.8 million in profits, average return of 85%, with about 91% accuracy. So I just want to give you these real-time results. You can see that these strategies have been performing very well in real time. And I'm also going to show you my current real-time results. And for the super portfolio, I currently have 66% average return. And the super option portfolio, I currently have a 516% return. So I'll show you my brokerage statements just so you can get an idea how this strategy is performing right now. So let's talk about the super portfolio trade selection process. And as I mentioned before, we're going to use technical analysis and combine that with fundamental analysis. And that allows us to select the stocks with the best profit potential. The idea being that you don't want to be buying stocks of companies that have no real earnings or no real sales growth. There's too many great companies out there that we want to focus on that have both good fundamentals and good technicals. So the idea is this narrows down that large list of stocks to the ones that have the best profit potential. And as the real-time results show, this has been a great strategy, very successful strategy, a good approach to investing in either stocks or options. And for the technical analysis part of the trade selection process, we use Prime Trade Select. And in previous webinars, I went through Prime Trade Select in detail. So today I'm just going to briefly discuss the 3 steps in Prime Trade Select. But if you'd like to take a more in-depth, detailed look at those 3 steps, in previous webinars, I went into great detail on the Prime Trade Select 3-step process. And there's 3 steps involved. Step 1 in Prime Trade Select is we want to determine the price trend using the 50 and 100-day EMA system. Step 2 is we use the OBB line and the new 52-week high list to confirm the price trend, determine the extent of the buying or selling pressure, and isolate the very best opportunities. And then step 3 is we want to select an optimum entry point, low-risk entry point, using the Keltner channels. And as I said in previous webinars, we went into great detail on these 3 steps. And then we also combine this technical analysis with fundamental analysis. So we want to find stocks on the very best companies that have strong balance sheets, companies that are not dependent on the price of oil or commodities in a deflationary environment, companies that have consistent equity, revenue, or retained earnings growth rates in a slow-growing U.S. economy. So there's a lot of great companies out there with very consistent growth rates, and despite the slow-growing U.S. economy. So we want to focus on those companies that have good, solid, consistent growth rates despite the slow-growing U.S. economy. And we like to look at companies that pay a dividend or have a stock buyback program in place, which is another form of a dividend. So these are the typical characteristics we look for in super portfolio stocks. And let's just take a look at the risk involved. This is a 1-year chart of the VIX index, and we can see each one of these volatility spikes here of the VIX index, which measures fear and volatility. Each one of these spikes represents a sell-off in the market. So the goal of Prime Trade Select is to find a low-risk entry point and avoid being stopped out of your position. Whether you take a stock or an option position, we use money management discipline to exit a stock trade if it loses 10 to 15% from our entry price. And with an option trade, we give that a little more leeway because it's more leveraged, and we usually exit at a 20 to 30% loss. So the goal of Prime Trade Select is to find a low risk entry point so that we don't get stopped out when the market has these periodic sell-offs, as you can see over the past year. And again, every one of these volatility spikes represents a market sell-off. So the prime trade select process has allowed us to find low risk entry points and avoid being stopped out of our positions. And that, of course, leads to successful trading because we'll hold the position and just ride that stock trade or call option trade as the stock moves up in price. And that's allowed us to really build up our profits over the past year, despite these various market sell-offs that we've had. Let's look at some current trade examples that I have right now. The first one we're going to look at is TJX, the retailer, and what I'm displaying now is a daily price chart for TJX. This is around the period that I was purchasing the stock, and the vertical lines right here represent the daily price movement of TJX, and this blue line right here is the 50-day exponential moving average line. The red line is the 100-day exponential moving average line. So we want to focus on the trend of a stock, and the way we quantitatively measure that is we look to see if this 50-day EMA is above the 100-day EMA. If that's the case, then the stock is in a price uptrend and qualifies for a stock purchase or a call option purchase. And we also like to confirm this price uptrend, and two of the trend confirmation indicators that we use is the new 52-week high list. And we like to focus on stocks that are making a new 52-week high. And you can see from this daily price chart right here that TJX has been making a series of new 52-week highs. And so that confirms this price uptrend. And we also like to look at this unbalanced volume line, which is the lower chart here. And what we like to see is an upsloping unbalanced volume line. Volume precedes price, and we want to confirm this price uptrend with the unbalanced volume line. So this is an example of the prime trade select process I use to select TJX. And let's look at the fundamentals of TJX, the retailer. We just saw that it was on a prime trade select buy signal. TJX has a solid balance sheet. It's not dependent on the price of oil or commodities, and it has very consistent equity and retained earnings growth rates in a slow-growing U.S. economy, and also pays a dividend. So I like to combine this fundamental analysis with the technical analysis, and this allows us to, for the most part, pick out very successful companies and good appreciation potential if you're going to purchase the stock or the option. And once in a while we do get stopped out, but for the most part, when we use this prime trade select process, it allows for a low risk entry, and we have done very well using this combination of technical and fundamental analysis. And here's a snapshot of my open trade profits with TJX. I highlighted them, and these are in my two retirement accounts, and I currently have over $166,000 in open trade profits in TJX and an average return of 99%. So I just highlighted the two trades here. In one retirement account, I have a $92,000 profit, and in the other one, I have a $73,000 profit. So I'll continue to hold TJX as long as it meets our prime trade select criteria. And you can see that in this example that it's worked out very well for this TJX purchase. Let's look at another example of a trade that I have on right now. This is for Home Depot. And again, we can see right here the 50-day exponential moving average line, which is this blue line, crossed above the 100-day right here. So at that point, Home Depot was on a buy signal according to our trend indicator. So as long as this 50-day exponential moving average line, this blue line, as long as that's above the red line, the 100-day, then the stock is on a buy signal. So we can see Home Depot is on a buy signal, and we can tell by the daily price movement that it has been making a series of new 52-week highs. And looking at the on-balance volume line in the lower chart here, we can see it has an upsloping on-balance volume line, which confirms the price uptrend. So this is the technical analysis I use to buy Home Depot. I also like to look at the fundamentals, and Home Depot has a solid balance sheet. It's not dependent on the price of oil or commodities, has consistent revenue and retained earnings growth rates, and also pays a dividend. So this is another example of using that combination of technical and fundamental analysis to select the best stocks. And here's a snapshot, open trade profits for Home Depot in my two retirement accounts. And I have a $56,000 profit, average return of 43%. And here's one more example. This is a more recent trade that I took. This was for Starbucks. And again, we can see right here, this was December of last year, just about a year ago. For Starbucks, the 50-day EMA crossed above the 100-day EMA right here, and Starbucks was on a buy. According to our trend indicator, we can see it's been making a series of new 52 weeks highs, confirming this price trend, and also has an upsloping on-balance volume line. And again, Starbucks has very good fundamentals, solid balance sheet, strong equity and retained earnings growth rates, and it pays a dividend. So again, this combination of technical analysis and fundamental analysis is a good combination, and this is a recent trade. I haven't built up my full position yet in Starbucks. I like to leg into my positions, and I'll buy the stock in increments as long as I have a profit from my last purchase point. So in other words, I'll usually leg into a stock in 3 or 4 increments, but I only buy if I have a profit from my last purchase point. So I'm just starting to leg into Starbucks. I have a $6,400 open trade profit and a return of 18%.
Chuck, can I interrupt you for a moment?
Yeah, sure.
You mentioned how you leg into your trades. We're getting some of the attendees asking, before you purchase these stocks and you do your qualitative and quantitative analysis, do you have a set dollar denomination that you prefer to really hone in on and divide that up and leg into the process that way? Or is it based on denomination of your portfolio, like a percentage or something?
Yeah, that's a good question. I allocate my portfolio to several different strategies. And for example, for the Prime Trade Select stock and ETF positions, I usually have about 10 different positions, and I'll leg into each one of those positions, like I say, 3 or 4 increments to build up my full position. But an easy way to do it is if you have a stock portfolio, you want to buy 8 to 10 stocks in different industries, and then divide up that allocation. Do that evenly. So if you had $100,000 and you were going to buy $10,000 and place that into 10 different stocks, you'd want to take that $10,000 and maybe leg into that $3,300 at a time, so that you establish your position over time, and only if the stock is advancing in price. So you can just simply do a dollar amount allocation, and buy 8 to 10 stocks in your portfolio, or 8 to 10 options, and just leg into that in 1/3 increments, which is the way I do it.
I understand that. I agree with that answer. Thanks, Chuck.
Okay. And let's look at real-time results for the super stock portfolio. And what I did is I took some snapshots over the last 4 or 5 years, and just took a look at the profits I have on stocks that I selected using the Prime Trade Select. And most of these trades I'm going to show you are super portfolio stocks. I do have ETFs mixed in here, but most of the trades were super portfolio stocks. So in this first example, and these total over $1.2 million in profit. So I'll just go through these quickly. But in this first example, I listed the stock positions here, and then the profit and loss was in this column here. So in this account, I had profits of $123,000, average return of 43%. So these total over $1.2 million in profits, and it doesn't include the positions I just showed you. I had about $250,000 in current profits, and that's not included in these snapshots here. So I'll just go through these quickly. You can see the position on the left-hand side, and here's this column lists the profits and the percent return. In this account, I had $143,000 profit, average return of 30%. So I'll just go through these kind of quickly. These are in various accounts that I trade, both retirement accounts and non-retirement accounts. These two portfolios had average return of had a profit of $315,000, average return of 38%. These portfolios had a dollar profit of, let's see, $290,000, average return of 15%. Okay, let's look at some trades that I think are good candidates right now for super portfolio purchase. First one we're going to look at is MasterCard. I've owned this for a long time, and you can see MasterCard is in a price uptrend according to the 50 and 100-day EMA system. It's been making a series of new 52-week highs, and we have a sharply upsloping OBV line. So this has been a great stock to own. I own both the stock and options on MasterCard, but I still think it's a good candidate at this point because it has a very solid balance sheet and very strong growth rate. So here's a stock that I own, and I think it's a good buy candidate if you want to own the stock or option. And here's another stock that I own, Halliburton, and it's on a Prime Trade Select buy signal. It has a solid balance sheet and strong growth rate. So there's two ideas for trading stocks or options using the super portfolio technical and fundamental analysis. Okay, let's talk about the super option portfolio, and we'll talk today about the trade selection process we use for the super option portfolio, and we'll also talk about strike price selection using the 1% rule, and then I'll have a few more super option portfolio trades that you can take based on the current technical and fundamental analysis of these stocks. And then I'll take questions or answers at the end of the session. And in the super option portfolio over the last several years, I've had over $1.8 million in profits, average return 85%, 183 wins, 17 losers, so about 91% accuracy. And most of the stocks in these portfolios were selected using the super option portfolio trade selection process. I do have some ETFs mixed in there, but for the most part, these are the same trade selection process we use for the super option portfolio. In current real-time results, I'll show you a snapshot of my brokerage account. And the super option portfolio currently has a 516% average return. Okay, with the super option portfolio, we use the same prime trade select technical analysis that we use for stocks, and we use that to select stocks that we want to purchase call options on. And we also use the fundamental analysis, and this combination of technical and fundamental analysis allows us to select stocks that have the best profit potential for purchasing call options. And then there's an extra step in here. We use the 1% rule to select an option strike price with a high probability of success. So call options, of course, increase in value as the price of the underlying stock moves up in price. So the goal of the super option portfolio is to identify stocks moving up in price using the prime trade select and fundamental indicators. So if we can purchase call options on stocks that are moving up in price, that allows us to harness the leverage provided by options. So we want to identify those stocks that are moving up in price, purchase a call option, and then that call option will increase in value as the stock moves up in price. And I also wanted to mention that prime trade select works both ways. And in the past, during the last two severe bear markets, we used prime trade select to select stocks that were on a sell signal that had weak fundamentals. And we would purchase put options or put option spreads on stocks that were on a sell signal with weak fundamentals. And we had mostly short positions during the last two severe bear markets in 2008 and 2002. And we did very well with our short positions. So I just wanted to mention that right now we're in a bull market. We have call options, bullish positions, but you always want to be aware of the fact that, eventually a bear market will occur, and the prime trade select does work well in both bull and bear markets, and was very profitable during the last two bear markets. So I just wanted to mention that, keep that in perspective. Let's just take a look at the general risk involved with purchasing call options. They're highly leveraged compared to buying a stock, so you have to keep that in mind. With that high leverage comes higher risk. So what I did is I took a snapshot, this was several months ago, of Home Depot. This is an option chain. This is for the August options that had a little over 2 months to expiration. So at the time, Home Depot was trading at 77.73, the stock. So the at-the-money call option would have been the 77.5 strike. So if you were to purchase the at-the-money call, you would have paid about $325, and So let's take a look at the risk involved with option purchases. And what I did was I plugged in the current stock price of Home Depot at $77.73. The option price we were looking at was the at the money 77.5, and the premium would have been $325. So I plugged these numbers into the call option purchase calculator, and what this will do is it'll calculate the profit potential for buying this 77.5 strike call, assuming various price changes in Home Depot stock at option expiration, in this example, from a 10% increase in the stock price to a 20% decline in the stock price. So you can see in this bottom row here is the profit loss potential based on these various price changes of Home Depot stock at expiration. So we can see if Home Depot stock was flat at expiration, we'd have a 92% loss with this option purchase, and if it was down, we'd have a 100% loss. So you always want to keep that in mind when you're trading these options, that they're very high risk due to the leverage. And we can see if the stock is flat, 92% loss. If it declines in price, we have 100% loss. So you want to be really careful when you're selecting these option trades, because you don't want to take 100% loss on your option trade. And as it turned out, Home Depot closed at 75.38. So this option purchase would have resulted in a 100% loss. So you just want to keep that in mind when you're trading options. And the goal of the super option portfolio trade selection is to avoid large losses, which can knock you out of the game. So we always want to keep that in mind. So in the trade selection process, we want to select options that have the highest probability of success, and I'll show you how we do that. Again, here's another daily price chart of the VIX index, and again, each one of these spikes here represents a market sell-off. So if you're buying call options and you get one of these market sell-offs, you could easily incur a 100% loss in a day or just a few days, depending on your timing. So if you have bad timing, you can easily lose 100% on these options. So we want to try to avoid those 100% losing trades, which can knock us out of the game. So I'll show you how we go about doing that. And the Prime Trade Select technical analysis for options is the same as it is for stocks. We're looking for stocks that are in a price uptrend using the 50 and 100-day EMA system. We want to confirm that price trend using the OBV line and the new 52-week high list. And then we want to select an optimum entry point using the Keltner channels. And this is a very important step, this step 3, when you're trying to select an option, because you want to get a low-risk entry so that you have a lower probability of getting stopped out of that trade. And then we also use the fundamental analysis when we're purchasing call options. We like to see stocks on companies that have strong balance sheets, not dependent on the price of oil or commodities, have consistent equity, revenue, or retained earnings growth rates in a slow-growing U.S. economy, and they pay a dividend or have a stock buyback program in place. So again, we look at the technical indicators and also our fundamental indicators to select stocks on companies with the best profit potential. So let's look at some current trade examples, and we'll look at the process that I went through to select these trades. First one we'll look at is for Cigna, the insurance company, and here's a daily price chart of Cigna, and we can see back in September of last year, the 50-day EMA crossed above the 100-day EMA, so Cigna was on a buy signal at this point. And we can also see that it has an upsloping on-balance volume line. So this upsloping OBV line confirms the price uptrend and the sustainability of the uptrend because it measures the volume flow behind the price move. So these are our first two steps. We can also see that Cigna, we can see the daily price movement here making a series of new 52-week highs. And then step three is using the Keltner channels to select a low-risk entry point. And here's a daily price chart. Vertical lines are the daily price movement of Cigna. And then overlaid is the three Keltner channels. The upper channel is this blue line. Middle channel is this dotted line in between. And then the lower channel is the lower blue line right here. And the Keltner channels act basically as an overbought, oversold indicator. And we want to buy the stock when it's becoming oversold and it's retracing towards this middle or lower channel. And we can see when the stock gets up above the upper channel, it's getting overbought, and there's usually a retracement. After a stock gets overbought, it sells off. So we can see got overbought, sold off, overbought, sold off, overbought, sold off, overbought, sold off. And right here, I purchased a call option on Cigna, and I wanted to wait. You can see that Cigna's already made a huge move here. So the question is, where do you jump in if you want to buy a call option? So you don't want to buy a call option when Cigna's trading up near this upper channel here or above the upper channel, because the stock's getting overbought and the odds are it's going to retrace. So we simply wait for the stock to retrace, and I purchased a call option right here when it was trading near this lower channel and was getting oversold. So that's how we use the Keltner channels to select a low-risk entry point. And you can see from this day right here, when I purchased the call option, you can see that was a low-risk entry, and that Cigna continued to move up, and it's trading around 81 or 82 right now. So using these Keltner channels with step three of our trade selection process allows you to get a low-risk entry, which is very important when you're trading options because they're so highly leveraged. So you want to try to select an entry point to avoid being stopped out of your position. And also looking at the fundamentals on Cigna, it has a solid balance sheet, it has a low debt to equity ratio. It's not dependent on the price of oil commodities. It has an annual equity growth rate of 24% and pays a dividend. So Cigna has solid fundamentals, and using step three of our prime trade select, I was able to select a low risk entry right here. Now let's talk about the 1% rule to select an option strike price with a high probability of success. So once you select a stock that you want to purchase a call option on, there could be hundreds or even thousands of strike prices to choose from. So selecting this strike price can be just as important as the trade selection process itself. So just to look at option basics, option premiums consist of time value and intrinsic value. So options lose all their time value at expiration. So when you buy an option, you're buying a decaying asset. So you always want to keep that in mind. Whenever you own a call option, the time value portion of that call option is decaying every day until it goes to zero at option expiration. So due to these time decay characteristics, we want to minimize the time value portion of the option, which goes to zero, and then we want to maximize the intrinsic value. So let's see how we can do that. I have a very simple rule in selecting the option strike price, which I call the 1% rule. And what I try to do is I'll buy an option and I try to limit that time value to less than 1% of the stock price per month. And if you can do that, then you minimize the time value of that option and you maximize the intrinsic value. So an example of that would be, let's say you purchased a stock that's trading at 100 and you buy a 1 month option. You want to limit the time value of that option to 1 point or less, which would give you 1% of the stock price per month. Another example would be if you're trading a stock that's trading around 100 and you buy a 2 month option, you want to limit the time value to 2 points or less. So if you do that, then you're going to minimize the time value portion and maximize the intrinsic value. So if you limit the time value to 1% of the stock price, the stock only has to go up 1% in order for the trade to break even and start making money. So this would have a much higher probability of being profitable than buying an option strike price that says that requires, let's say, a 6 to 10% increase in the price of the stock to break even. So if you're buying a call option and the stock only has to go up 1% in order for you to start making money, that's a much better, much higher probability trade than purchasing a strike price that requires, let's say, a 6 to 10% increase in the price of the stock just to break even. So let's look at that Cigna trade again. And what I did is I included a snapshot of my brokerage account transaction history. And we can see on June 3rd, I bought the Cigna 50 strike call option at 17 points. So this is June 3rd right here. So again, I waited for a low risk entry, purchased the 50 strike call at 17 points. And this was, at the time, this was the July 50 strike call option. So let's take a look at the time value portion of this option. And what I did is I plugged in this actual trade that I took, buying the 50 strike call at 17. So the stock was trading at 66.71, bought the 50 strike call at 17 points. And again, the call option purchase calculator will calculate the profit potential for this option purchase, assuming various price changes in Cigna stock from a 10% increase to a 10% decline. And the call option purchase calculator will also calculate the time value and the intrinsic value of this option. So again, I paid 17 points for the option. It only has 29 cents of time value, and it has 1671 of intrinsic value. So Cigna stock only has to make a very small move in order for this trade to break even. So with 29 cents of time value, Cigna stock only has to increase 29 cents or 0.4% for this trade to break even. So any increase in the stock price above that 29 cents or 0.4% will result in a profit. So the stock doesn't have to go up very much for this option to be profitable. So again, a 0.4% increase in the stock price to break even, that obviously will have a much higher probability of success than say a 10 to 15% increase in the stock price to break even. So these in-the-money call options have a much higher probability of success because the stock only has to go up, in this example, 0.4%, and then you start making money. Here's another example. This was for Best Buy. Again, we can see that Best Buy has made a big move already, and question is, when do you want to enter this type of trade after the stock's already made a big move? So we can see right here, Best Buy did sell off, retraced near this lower channel, and this was on June 24th, which is this bar right here, this lower bar that's getting close to this lower Keltner channel. So June 24th, I bought the Best Buy 20 strike call at 664. So again, I was waiting. I wanted to participate in this big price up move for Best Buy. So I waited till it retraced right here, bought the call option, and you can see, again, I got a very low risk entry using these Keltner channels, and now Best Buy is trading up around 43. So it's made a huge move from here when it was trading around 26. So looking at the fundamentals for Best Buy, it's on a prime trade select buy signal, has a solid balance sheet with a low debt to equity ratio, not dependent on the price of oil or commodities, and it pays a dividend. So I plugged in the numbers from this call option purchase. Again, this was on June 24th, bought the 20 strike call at 664. Stock at the time was trading at 26.46. Did the calculation, we can see the time value of this option was only 18 cents. Intrinsic value was 6.46. So most of this option was intrinsic value, very little time value. And what that means is the stock only has to increase 18 cents or 0.7% for this trade to break even. And then any increase in the price of the stock above this point, of course, will result in a profit. So what I did was with these super option portfolio trades, they've been very profitable. I've been able to select a low risk entry. I use the 1% rule, and I have a lot of very profitable trades. So you're always faced with that question at option expiration: should I roll over or close out the position? So what I do is if the stock still qualifies under prime trade select and our fundamental criteria, then I'll simply roll over the option. And when you roll over these options, it reduces the cost basis of the new trade, and that allows us to compound our returns. So I've been doing that month in and month out. If the stock still qualifies, I'll roll over and purchase the new option, close out the option that's expiring. So this rolling over these options allows us to reduce the cost basis of the new trade, and it also reduces the risk, and that allows us to compound the return. So I took a snapshot recently of my super option portfolio, and this portfolio has average return of 516%. And I was able to get such a high percentage return because I've been rolling these over for 3 or 4 or 5 months. And of course, when I roll over, that reduces the cost basis. So I'm going to have a higher percentage return, and that allows me to compound my returns by these rollovers. So that's why my option portfolio currently has a 516% return. So let's look at some trades that look good right now, I think, for option purchases. The first one here is Starbucks, and again we can see Starbucks is on a prime trade select buy signal. Right here, the 50-day EMA crossed above the 100-day EMA and remains above the 100-day EMA, so it's on a buy signal. We can see Starbucks is making a series of new 52-week highs. We have an upsloping unbalanced volume line, and it just recently retraced towards that middle Keltner channel, so I think this would be a good buy for a call option purchase. And Starbucks has a very solid balance sheet and very strong growth rate. So here's an idea for a call option purchase. And another stock that would meet our criteria would be Boeing. And again, we can see Boeing's on a buy signal, is making a series of new 52-week highs and has a sharply upsloping on balanced volume line. So there's two ideas for option purchases. And I took a snapshot of my advisory service option portfolio. Most of these options are super option portfolio trades. We do have some ETFs, and we can see that this portfolio currently has an average return of 659%, open trade profits of 166%. And you can see here we have two put trades, and what I did was during the fiscal crisis in Washington, we didn't know which way that was going to go. So what we did is we bought some leveraged ETF puts to hedge our long option portfolio. So these were hedge trades that we took during the fiscal crisis in Washington. And of course, these have a loss now, but they served their purpose and they hedged our portfolio during that crisis. So despite these the losses in these hedge trades, we still have an average return of 659%. So you can see the prime trade select process in combination with rolling over these options has really been working very well, and it's allowed us to compound our returns with an average return of 659%. So let's take a look at my brokerage profit loss reports, and we can look at the actual trade results for my option portfolios. Again, it was over $1.8 million in profits, average return of 85%, 91% accuracy, and most of the trades I'm going to display are super option portfolio trades. So I'll just go through these quickly. Here's a Trade Monster option portfolio, average return of 198%. This is actually one of my trading contest, World Trading Championship. This is one of my option portfolios, average return of 75% in this portfolio. Here's another portfolio. This had $254,000 in profits, average return of 114%. So I'll just go through these quickly. These total over $1.8 million in profits, and I'm showing these just to demonstrate that this strategy has been very profitable over the years. Okay, that concludes the presentation, and I'd be glad to take any questions at this point. If you want to get updated profit results for these various strategies, you can just log on to weeklyoptionalert.com and then click the trade results link right here, and it will give you updated profit results for these various portfolios. So that concludes my presentation. I'd like to take any questions that you may have.
We have a question from Gail Alleman. She's asking, Chuck, do you use the options calculator specifically for the presentation of your strikes that meet the 1% rule?
I use the option calculators before I take an option trade in all cases, whether I'm purchasing a call option or I'm doing a call option spread, a market neutral spread. a covered call, what I do is I'll plug in the numbers for that trade, and then I'll do the calculation. Now I do that all before I actually take the trade. So when I do that, I can see if it's a call option purchase, I can see what the time value portion is and the intrinsic value before I take the trade. And then what I like to do is limit that time value to less than 1% of the stock price. So once I do the calculation with the calculator, I can easily tell if it's going to beat that 1% rule, and it also will display the profit potential for the trade, assuming various price changes in the underlying stock. So I always use those calculators, no matter which type of option trade I'm taking. I'll use those calculators before I take the trade.
Regarding your specific ways of targets, I know you mentioned it earlier, but perhaps do you come up with a specific on your program, on your option alerts? Do you come up with 52-week highs that you like to focus on?
Yes, that's one of our main selection criteria. Is we look at the new 52-week high list every day, and when we do that, we start to see a pattern of stocks that are making a new 52-week high on a very regular basis. So obviously, if they're making a new 52-week high, they're on a very powerful uptrend, and we like to focus on those kinds of stocks. And right now, Starbucks and Boeing, MasterCard, Google, Celgene, they're Best Buy, they're making a new 52-week high on a regular basis. So we like to focus on those stocks because they're in the most powerful price uptrend. So that's a very good list to look at. Gives you a real feel for stocks that are really outperforming the market, and we like to focus on those stocks.
Great. I know there's a lot of questions out there. We try to keep these short and sweet, but many of the questions, Chuck has been kind enough. Chuck, by the way, for anyone that has questions regarding this, feel free to contact Brad over at Chuck's office. The support group will help you out. They can address a lot of these questions on Chuck's behalf and discuss some of the strategies as well. So don't forget to write down the weeklyoptionalert.com or contact Brad, and that's his contact information. Otherwise, Chuck has been kind enough to allow us to actually archive every one of the webinars. And Chuck, we've been doing them for years now, these educational webinars. And I get click-throughs and people downloading them and playing them back time and time again just to get the intricacies because you cover a lot of material. So I think I had several clients today and several attendees today thanking you for that. So I just want to shout out on their behalf saying thanks for allowing that. Okay,
yeah, you're welcome, and I'm glad to do it.
Okay, sounds great. Chuck, I'm going to take the reins real quick from you, just so you know.
Okay.
For those of you that do want to check out this archive, today's webinar is going to be recorded, and I will have it posted tomorrow on mytrademonster.com. I'm having that come up right now. One moment for me, but right here on the right-hand side, you'll see webinar archives. This is www.mytrademonster.com. I'll have Chuck listed here tomorrow under November. Any upcoming webinars, feel free to come back to this. Chuck is one of the guests that we're with every single month. Thanks again for that, Chuck.
Okay, and thank you, Tom, for taking the time to set this up for people.
Education is invaluable.
You
know.
Yeah, much appreciated.
You taking the time. So, for those of you that want to come out, listen to it again, feel free to come over here. Otherwise, if you want to get a hold of Chuck or ask some questions, contact his support staff. His archives will be here. Thanks for joining us. To all the attendees, thank you again, Chuck, and happy trading, and till next time, Chuck, next month, I hope.
Okay, sounds good. Have a great night, everybody.
Likewise. Thank you. Good night, everybody.
All right, good night.